In this video, I'm going to show you how I found this trade on EURUSD. When you finish this video, head over to the link in the description and join my free trading course. It's a 13-part video series which should open your eyes to a new perspective of the markets. So be sure to do that to improve your trading. Hello everyone and welcome back to the channel. I hope you had a good weekend and I hope your week has been profitable so far. For me, I haven't really taken any trades. I took a loss today at the time of recording this video. Got caught on the wrong side of a headline news. Not the best, obviously not too bad though, because the last good trade I took was last week and that was Thursday to Friday on this very, very nice trade on EURUSD. So even though the markets aren't too favorable now, there is this great trade that's carrying me through. And hopefully we hit some nice wins soon. But for now, let's break this trade down and I'll show you how I found this, why I executed it, and how I actually got in and got out of this trade. So this trade was taken on the 24th of March and it was at the New York Open. And it was kind of a New York reversal trade. It was entered with a buy limit, a risk entry, if you've watched my previous videos. And it was to just generally take the market through the day's trading range. So clearing it off and scaling back a little bit, I'll break down the trade as we go. So here on the weekly time frame on EURUSD, what we've seen is obviously quite a large sell-off here, but price had then hit a demand zone here on the weekly. If we mark this indecision candle out, we hit this demand zone and the market started to make a push to the upside. So what this told me was potentially we are getting ready to make a rally. Potentially if we find buying opportunities, we could roll with those because we've obviously hit demand and we do have some imbalance above towards, this point here and potentially beyond. So the basis for this trade was simply look to follow the trend out of this demand zone. And if we look at the 4 hour, we see a very nice midpoint reaction on that weekly demand zone. Nice push up, high, higher low, higher high. Now we could be looking at potentially a higher low. Now it's very difficult to find the right zone to buy from here because all of this pricing is efficient. There's no very clear zone, such as obviously here, there was a very clear zone to buy from. Here we don't really have that. So what we'll be looking for is generally what is the trend doing here and where could we potentially take it to? Either whether that's a push down to then buy up or a simple buy from where we are right now. So then that brings me to the day's trading range. And basically what we saw here was obviously the low point here and the high point up here. This is the range we're going to be working within. And what I actually saw here was, well, we've seen this kind of demand zone retested here. Then we actually formed new demand, pushed up, broke through a few small structure points. And this actually formed new demand, which was then retested. After the retest, we pushed up, broke through another few small substructure points here and left open some imbalanced space to the upside. So my idea for this trade was simply, well, because we've hit demand and reacted, we may come back, hit this demand, react once again to possibly push price towards, first of all, Asia high. I like to use that as a liquidity target. And then second of all, maybe towards the supply area up here. So shifting to the 15-minute now that we have an overall idea for a trade, what we can actually do is begin to formulate a setup. So we can grab our demand zone tool here and we can see very clearly a 15-minute demand zone at the bottom of this large push-up. Now I did also execute a move here throughout the Asia session. We had obviously lower lows and lower highs to this point. Then we had this lower low, higher high. So I brought in down here, took the market up, closed out 1R profits, which I think was a quarter of my move at 4R or half my move at 2R, forgotten now. But then the rest of the move was break even. And that was the 1R that I actually used to risk on this position. So the reason that this new setup came about to me and why I actually went with a buy limit and why I actually executed this trade was, first of all, demand zone, obviously in the uptrend, the clear picture of higher lows that we are forming. Demand zone is imbalanced as well, so that gives me extra confidence that this area is going to be filled. And what we also saw after this big wick down, which took out my original position for break even, was the formation of two very, very equal, very clear equal lows. So marking that on the chart now, you can see we have a floor of liquidity sitting over an imbalance leading into a demand zone. So we have many confluences here that could drive the market down, take out the stops of any buyers at these levels, and then make a nice sharp push to the upside. So obviously in terms of targets, I do still want to see the high of the Asia session taken out, and that would be this blue box here. I like to see the liquidity either side of the Asia range swept. We can see it's obviously being swept to the downside now. So we are very likely to see before the session ends, the liquidity to the top of the Asia session taken out as well. Now, if we go to the 10 and 5 minutes, we do see a clear supply zone here. This was the area I used for my target, just the supply zone, obviously being the last indecision candle before the large sell-off. So this was my major target. Now, why was I happy to use a buy limit? Well, the reasons I just mentioned to you. We do have heavy imbalance, we do have equal low liquidity, and we do have a clear extreme or final demand zone within this movement. So it's a high probability area to buy from, and due to the liquidity and imbalance, it's also an area that's likely to form a very fast reaction. So I think my trade was around 8.6 R, so possibly, maybe entered a little bit higher than this, stop maybe a little bit lower, but around 8.6 R was the actual movement that I got on myself. Obviously, this one's slightly different. It was 8.7, 8.3, but this is the general move, that we went for. So let's see how the market plays out. We do see quite a nice push down towards that level. And you'll see after pushing through the liquidity, we did tap straight in and then make a very fast push away. So like I expected, we did actually get a very impulsive move from this point, because as soon as we tapped in, we obviously had cleared the liquidity, filled that imbalance, and tapped into the extreme demand, which gave a lot of buying pressure to the market. There's a lot of buy orders waiting here, indicated by this as well. So this is a high probability area for a fast reaction. So this was triggered in, ran very nicely. Now, the one thing I would note about this trade is I could have entered from the midpoint. I do actually recommend to enter from the midpoint on the 15-minute and above. But because I formulated the zones here on the 10-minute, I did opt for an entry on the top. So I could have over doubled my risk reward had I gone with that midpoint. That's just one note to myself. But still, I cannot complain about the profits made on this trade. So in terms of management, I didn't trail my stops on this one. I actually took some profits when we came towards this Asia high. Reason being, this is obviously an area of potential supply with this liquidity that we see here. The equal highs there, supply here, imbalance there. We may actually have seen a movement similar to what we saw below, where we come into this zone and then sell off heavy, right? So at this point, I took some profits. I think I took about half the movement at this. And I, by this point, locked in around 3R, I believe. And when we finally hit the target, the rest of the trade closed out. And I closed out just over 5R. So you will know I don't normally like to take profits, take partials. I actually like to take the full move or trail my stops. In this example, I did that a little bit differently. And I did go ahead and take the profits manually, which meant I didn't manage to get the full 8.6R out of the movement, but I still managed to lock in over 5% on a very simple movement like this. Here's the trade taken. I took 1R in profits off EU, as mentioned on the previous trade. Now we either run it to target from here on this new trade, and as we see, we did lock in some profits on the way, and then the target was done. So 8.3R was the final profit taken on that move. Not 8.6, but still very good. There we go. So there we go, that's the completed trade. I hope you found some value from this video, and I hope the breakdown's been useful for you in finding your own positions and building your knowledge of how the market moves and how you can capitalize upon that. For now, while the markets are messy, I will be avoiding and I will be staying out until things look a bit cleaner. Obviously, just rolling with the plan. When I see a solid setup, I'll take it. But the time for that is not right now, in my opinion. There's a lot of craziness going on today. We've seen big spikes and it is a little difficult to work with. So don't feel like you need to rush into the markets. Stay patient, keep studying, and you'll be ready to smash the markets when they do come around how we want them to. So thanks for watching, and I'll see you in the next video.